Hey, what's going on, everybody? It is Tuesday, November 23rd. So market bounced back a little bit. The Dow was up, S&P was up, NASDAQ was down, but it was well off its worst levels. We had another new high in bond yields, 2s, 5s, 10s, 30s. I'm not sure about 30s. But this is, again, this spillover effect from yesterday's announcement that Biden would be reappointing Jerome Powell as Fed chair. And everybody thinks Jerome Powell is a rate hawk, monetary policy hawk. I mean, that's what the market believes right now. So everybody freaked out and they're selling bonds and they're buying the dollar and yada, yada, yada. I've been through that whole thing many, many times. Fiscal flows, I talked about it yesterday. I alluded to it. There was a very weak flow on Friday. There was a reason for that, which I didn't get into the details in my video yesterday, but I did send out the reason to my subscribers. And yesterday's flow was very strong at 30 billion. And it raised the 10-day average to, I believe, 28.7 billion. That is a strong flow. And I have to say this, that even with the rate fears, look, rates may be a headwind for the market, but, you know, a little bit higher rates, it's not going to stop the economy. It's not going to tank the economy. It's not going to tank the stock market. You know, I see a lot of people now saying, oh, I'm going to short the market because rates are going up. Rates are one factor, and they happen to be a factor that most people don't understand, or they perceive it, you know, in a fashion which really doesn't apply. I mean, we've had rate cycles throughout the history of the stock market, and as long as basic conditions are supportive, and that's primarily driven by fiscal, it could also be driven by bank credit. And I know what you're going to say, oh, Mike, if rates go up, you know, there's going to be less lending. That also is not true. Like I've done statistical work on that, statistical studies on that, that have actually shown in periods of rising rates, there has actually been more rapid loan growth than in periods of falling rates. And, you know, that partially makes sense just on the basis of rising rates. If that is the central bank's response to faster economic growth, faster economic growth suggests that businesses and households have more capacity to take on more debt. I mean, they're just higher economic growth usually equates to higher income. And income is a very important factor in qualifying for credit. So a lot of this stuff, you know, people are just, they're freaking out over the wrong things. I mean, I come on here every day and I talk about the one thing, which is the fiscal flow. Let me also talk about today's announcement by Biden that he was going to be releasing, it's a coordinated release of 50 million barrels of oil from the Strategic Petroleum Reserve. 50 million barrels, and by the way, this is sour crude. Sour crude is crude with higher impurities, mostly sulfur. It's a heavy crude. It's more expensive to refine into gasoline. You know, ironically, it may not help gasoline prices come down, but at the same time, refiners might just take this, or oil companies might just take this crude and export it and just pad their profits. Like I've been buying oil stocks on the way down here. Here's the thing though, 32 million barrels of that 50 million, it's a loan. It has to be given back. within 6 months. All right, they'll give it back at what price? Eventually, they're going to have to buy back that oil and replenish the SPR. The other thing is this, just to put it in context, what is 50 million barrels of oil? The U.S. refiner inputs in the United States, that means the amount of crude going into refineries, is about 15.5 million barrels a day. All right, so you're roughly talking about 3 days worth of supply. And globally, I think we're something around 90, 92 million, 91 million barrels a day. I mean, so you're basically talking about what, a 12-hour supply of crude. I mean, it is really, really insignificant. However, having said that, and I would say, like, from the analytical perspective that I just gave there with the details of the numbers, I would say that's not really bearish for crude. And as a matter of fact, we did see oil shoot up today, I think about 3% or over 3%, on the announcement of that SPR release. But I will say this, and again, I guess I lean more towards the bullish side because here in the U.S., you know, we're now once again a net exporter of petroleum. You know, that keeps our stocks, our inventories low. But I will say this, I believe it's the last 5 of the last 6 weeks, we have seen a build in crude inventories. In fact, we're going to get some numbers tonight in the API after I post this video, probably. And crude inventories here in the U.S. are at the highest level in 3 months. So there still is the potential that this SPR release will result in more inventory build. And if that's the case, you will see speculators, you know, sell in the market and they'll push it down. I will remind you that, and I think I mentioned this, that oil producers have been net buyers of crude oil futures over the last 3 weeks, and they're net long by the biggest long position since the week, I believe it's the week ending October 5th. So whatever they're seeing, they're bullish, okay? And I've always said, you know, and I've done business. When I was a NYMEX member, I had a floor brokerage company on the NYMEX that executed business for oil companies. And, you know, you basically pretty much don't want to go against these guys. They're very, very savvy traders. You know, they got their pulse on the cash market, what's going on in the actual physical market. And it's rare to see them long futures, but they are. So that about sums it up for today. I anticipate NASDAQ will recover. Like I said again, interest rates may be a headwind to the stock market, but as long as we have the fiscal support, and we had a really good number in yesterday's flow, I mean, as long as we have that fiscal support, the market's going to go up, the economy is going to expand. I took a look again today at daily unemployment benefit flows. I may have mentioned that yesterday. I said it looked like the possibility that we hit a trough in early November and that these unemployment benefits on a daily basis, these flows started to pick up, which if that was the case, it would be suggestive of, you know, maybe some deterioration in the labor market, but that's not happening. We actually made a new low in those daily flows, meaning like less unemployment benefits being paid out, which I think right now you have to interpret that as a good labor market. So things looking good. I wouldn't short this. I'd be buying this dip, which I did a lot, and we'll see what happens. Anyway, I'll see everybody tomorrow. Bye.